Introduction: EcoWorld versus UEM Sunrise. EcoWorld Berhad, Malaysia-listed property developed with more than 11,000 acres land bank and GVD 94 billion. Operate across multiple segments: Eco Township Landed, Eco Rise High Rise, Eco Hub Commercial, Eco Business Park, Industrial and Quantum, Data Center and High Tech. UEM Sunrise Berhad, public listed developed under UEM Group, Khazanah with core stake in Macro Township High Risk Resident. UEM Sunrise Berhad, public list developed under UEM Group, Khazanah with core stake in Macro Township High Risk Resident, Commercial and Integrate Development. Master developed of Iskandar Putri, Johor, and now for premium project like Mount Kiara, KL, focus on large-scale strategy, mixed and lifestyle-oriented development. Different EcoWorld and UEM Sunrise. EcoWorld, broader diversification across different property segments. UEM Sunrise emphasis on large township integrate lifestyle community.
In this part, we will present about financial ratio for EcoWorld Development Group Berhad and UEM Sunrise Berhad for the years 2022, 2023 and 2024. Regarding liquidity ratio, first for the current ratio in 2022, 1.13 times, in 2023, 1.58 times, in 2024, 1.63 times. This show an increase from 2022 to 2024.
EcoWorld current ratio shows a consistent upward trend over the years. This improvement is mainly driven by an increase in current asset and better control of current liabilities. It reflects effective cash flow and working capital management, which strengthen the company's ability to meet its short-term obligation.
Second, for the quick ratio, in 2022 is 0.76 times, in 2023 is 1.10 times, in 2024 is 1.06 times. This show an increase from 2022 to 2023, then a small decrease in 2024.
EcoWorld recorded a low quick ratio in 2022 due to the impact of COVID-19 on property sales and cash flow. The ratio improved in 2023 and 2024 following economic recovery and stronger contribution from high-value projects such as data centers and industrial development.
Third, for net working capital, in 2022 is 356,219,000 ringgit. In 2023, 1,184,755,000 ringgit. In 2024, 1,294,130,000 ringgit. This shows a significant increase each year.
EcoWorld net working capital has been increasing consistently each year. This growth is driven by stronger cash inflow from property and completed project sales, allowing the company to comfortably cover operating expenses and short-term liabilities.
This slide shows the liquidity ratio of UEM Sunrise from 2022 to 2024. First, the current ratio. The current ratio increases steadily from 1.18 in 2022 to 1.57 in 2023 and 1.88 in 2024. This shows that the company's ability to cover its short-term liabilities using current assets is improving over time, indicating stronger short-term financial stability.
So this is my part and my name is Nabila. So first is the current ratio for UEM Sunrise Berhad. This graph shows that UEM Sunrise Berhad current ratio has been increasing over the 3 years. This means that the company is becoming more capable of meeting its short-term obligations. Overall, it reflects that improving liquidity and better working capital management.
Next, the current ratio. The quick ratio also shows an upward trend, rising from 1.03 in 2022 to 1.44 in 2023 and 1.71 in 2024. This suggests that UEM Sunrise has more liquid assets available without relying heavily on inventory, which reduces liquidity risk.
Next, for the quick ratio. So the quick ratio also shows an upward trend, which indicates that stronger liquidity without relying on inventory. This suggests that UEM Sunrise Berhad is managing its cash and receivable more effectively. As a result, short-term liquidity risk is lower.
Lastly, net working capital. Net working capital increases significantly from RM385106 in 2022 to RM1266186 in 2023 and RM1759694 in 2024. This indicates that the company has sufficient current assets to support daily operation and manage cash effectively. Overall, all three graphs show an improvement in liquidity, reflecting better cash management and a stronger financial position over the 3-year period.
For net working capital, the net working capital has been increasing, showing that current assets exceed current liabilities. This indicates a healthy liquidity position. It allows the company to support daily operations without facing short-term financial pressure.
In part 2, we have activity ratio. First, for inventory turnover in 2022 is 1.62 times. In 2023 is 1.71 times. In 2024 is 1.41 times. This show an increase in 2023 then a decrease in 2024.
EcoWorld inventory turnover shows a fluctuating trend over the 3 years period. The ratio increased in the second years, indicating improved sales efficiency but declined in the third year, suggesting slower inventory movement. This could be due to challenging conditions in the property market and the overall economic environment. From a vertical analysis perspective, EcoWorld holds relatively higher inventory, which reflect the nature of the property development industry, where assets are tied up in long-term development projects. This structure is common and acceptable for large-scale property developers.
Second, for average collection period, in 2022 is 76.28 days. In 2023 is 101.22 days. In 2024 is 80.60 days. This shows a significant increase in 2023, then increase in 2024.
EcoWorld average collection period shows a fluctuating trend over the 3 years. Initially, receivables took a longer time to collect, but there was an improvement in the later years, indicating better cash management and faster customer payments. However, the ACP remains relatively high due to the nature of the property development business, where sales are often collected through progressive or staged payments. This collection period is still considered normal for a large property developer like EcoWorld.
Next, for fixed asset turnover, in 2022 is 12.02 times. In 2023 is 13.52 times. In 2024, 14.92 times. This show a consistent increase each year.
EcoWorld fixed asset turnover shows a consistent upward trend over the 3 years period. This indicates that the company is increasingly efficient in using its fixed asset to generate sales. Although fixed assets make up a smaller portion of total assets, the rising turnover ratio reflects effective asset utilization. This aligns well with EcoWorld's business model, as major investments are concentrated in long-term development projects rather than fixed assets.
Lastly, for total asset turnover, in 2022 is 0.22 times. In 2023 is 0.25 times. In 2024 is 0.25 times. This show an increase in 2023 then remain stable in 2024.
EcoWorld total asset turnover shows a light improvement over the 3-year period and remains stable in the final year. This suggests a consistent ability to generate sales from its total assets. Due to the nature of the property development industry, where assets mainly consist of land banks, development projects, and property inventory, a lower turnover ratio is expected. A total asset turnover of around 0.25 times is considered normal for a large-scale property developer like EcoWorld and reflects effective use of long-term investment.
This slide presents the activity ratio of UEM Sunrise from 2022 to 2024, which measures how efficiently the company uses its assets and manage operations. First, inventory turnover. Inventory turnover shows a declining trend from 3.42 times in 2022 to 3.07 times in 2023 and 2.75 times in 2024. This indicates that inventory is moving more slowly over time, which is common in a project-based industry like property development, where sales depend on project completion stage. However, the inventory level remains manageable and does not indicate excessive build-up.
Next, for the inventory turnover shows that some fluctuations over the 3 years. This is normal for the real estate industry because property projects take longer to sell. Overall, inventory levels remain manageable and aligned with the company's project-based business model.
Next, average collection period. The average collection period improved significantly, decreasing from 166.71 days in 2022 to 144.16 days in 2023 and 97.11 days in 2024. This shows that the company is collecting receivable faster, leading to better cash flow and more efficient receivable management.
Also that the average collection period has been declining, which means UEM Sunrise Berhad is collecting receivables faster. This improves cash flow and liquidity. It also indicates better credit control and receivable management.
Moving on to fixed asset turnover. Fixed asset turnover fluctuates slightly from 1.24 times in 2022 down to 1.16 times in 2023 and then increasing to 1.29 times in 2024. This suggests improved efficiency in using fixed asset to generate revenue, especially in 2024.
The point is, the fixed asset turnover ratio shows an improving trend, indicating that better utilization of fixed assets. This means that the company is generating more revenue from its long-term asset. It reflects that improved operational efficiency.
Lastly, total assets turnover. Total asset turnover remains relatively stable at around 0.11 in 2022 and 0.10 in both 2023 and 2024. This reflects the capital-intensive nature of the property industry, where large asset base are required but asset usage remain consistent. Overall, the activity ratio indicate improving efficiency in receivable collection and asset utilization, while inventory and total asset usage remain stable and appropriate for the industry.
For the total assets, turnover remains relatively stable over the 3 years. This reflects that the capital-intensive nature of the real estate industry, where assets take time to generate returns. The stable trend indicates that consistent and controlled asset utilization.
Last but not least, in part 3, we have solvency ratio. First, for the debt ratio, in 2022 is 50%, in 2023 is 46%, in 2024 is 45%. This show a decrease each year.
Eco debt ratio shows a steady decline over the 3-year period, decreasing from 50% to 46% and then to 45%. This indicates that the company is gradually reducing its dependence on debt while strengthening its equity base. A debt ratio between 45% and 50% is considered moderate for a large-scale property developer, as debt is still strategically and used to finance long-term projects without excessive leverage. Overall, this trend reflects improved financial stability and better risk management.
For the debt to equity ratio, in 2022 is 98%, in 2023 is 87%, in 2024 is 82%. This show a decrease each year.
Eco debt to equity ratio shows a consistent downward trend over the 3 years, declining from 98% to 87% and further to 82%. This suggests that the company is reducing its reliance on debt relative to shareholder equity, leading to a stronger capital base. A debt to equity ratio within the range of 82% to 98% is considered healthy and appropriate for a large-scale property developer, as it reflects a balanced approach between debt and equity financing. This trend indicates better financial prudence and lower financial risk.
Next, for times interest earned, in 2022 is 3.33 times, in 2023 is 3.20 times, in 2024 is 4.47 times. This show a small decrease in 2023, then a significant increase in 2024.
Eco time interest earn ratio shows some fluctuation over the 3 years periods, with a slight decline from 3.33 times to 3.20 times in the later years. However, the ratio remains above 1, indicating that the company earns sufficient to cover the interest expenses. A time Interest earned of around 3 to 4 times is considered reasonable for a large-scale property developer, showing efficient debt management, strong operating performance, and the ability to meet interest obligations comfortably.
The solvency and leverage ratio illustrate the financial position of UEM Sunrise from 2022 to 2024, focusing on the company's level of debt and its ability to meet financial obligations. The debt ratio shows a consistent decline from 47.34% in 2022 to 46.41% in 2023 and further to 45.33% in 2024, indicating that the company is becoming less dependent on debt financing and is maintaining a stronger balance sheet with lower financial risk.
So for the debt ratio, this graph shows that UEM Sunrise debt ratio has been decreasing over the 3 years. This means that the company is relying less on debt to finance its assets. Overall, this reduces financial risk and indicates a stronger and more stable balance sheet.
Similarly, the debt to equity ratio decreased from 89.91% in 2022 to 86.60% in 2023 before slightly increasing to 89.90% in 2024. However, the overall level of leverage remains manageable, suggesting an improved capital structure with a greater reliance on equity financing.
Debt to equity ratio is also declining, which shows that UEM Sunrise Berhad is shifting toward more equity financing rather than debt. This improves the company's capital structure and lowers financial risk. It also makes the company more attractive to investors.
In terms of interest coverage, the times interest earned ratio increased slightly from 1.74 times in 2022 to 1.75 times in 2023, before declining to 1.4 times in 2024. Despite this decrease, UEM Sunrise is still able to cover its interest expenses, indicating that its debt burden remains under control. Overall, this ratio demonstrates that UEM Sunrise maintains a stable financial position, supported by declining reliance on debt, control financial risk, and sufficient capacity to meet its interest obligations.
The times interest earned ratio shows that UEM Sunrise is able to cover its interest expenses using operating earnings. Although there are slight fluctuations, the ratio remains above 1. This indicates that the company does not face difficulty in meeting its interest obligations.
Lastly, in part 4 is profitability ratio. First, for gross profit margin, in 2022 is 24%, in 2023 is 24%, in 2024 is 27%. This shows a stability in the first 2 years, then an increase in 2024.
EcoWorld gross profit margin remained stable at around 24% in the first 2 years and increased to 27% in the third year. This indicates effective control over cost of sales and improved operational efficiency. A higher gross profit margins mean a larger portion of sales is retained as gross profit, reflecting enhanced profitability and cost management in line with industry standards for large-scale property developers.
Second, for operating profit margin, in 2022 is 16%, in 2023 is 18%, in 2024 is 23%. This shows a consistent increase each year.
EcoWorld operating profit margin shows a steady upward trend over the 3 years period, increasing from 60% to 80% and then to 23%. This reflects improved efficiency in generating operating profits from sales. The rising operating profit margins indicates better control of operating costs and stronger operational performance, which is expected for a large-scale property developers.
Third, for net profit margin, in 2022 is 8%, in 2023 is 9%, and in 2024 is 13%. This shows a consistent increase each year.
EcoWorld net profit margins demonstrates a positive growth trend, increasing from 8% to 13% over the 3 years. This shows that the company is improving its ability to convert sales into net profit. The increase in net profit margins reflects effective cost management, operational efficiency, and sound financial policies, supporting long-term profitability.
Finally, for return on equity, in 2022 is 3%, in 2023 is 4% and in 2024 is 6%. This shows a consistent increase each year.
Ecoworld return on equity has increased steadily over the 3-year period from 3% to 4% and then to 6%. This indicates that the company is becoming more effective in generating profits from shareholders' equity. The rising ROE reflects strong financial performance and efficient equity management, which is aligned with the operation of a large-scale property development company.
The profitability ratio illustrates the performance of UEM Sunrise from 2022 to 2024, focusing on how efficiently the company generates profit from its operations. The gross profit margin increased from 29.26% in 2022 to 35.38% in 2023, before slightly declining to 31.16% in 2024. This overall improvement reflects better cost control and pricing efficiency, and despite the small decrease in 2024, profit retention remains stronger compared to 2022.
For the gross profit margin shows that an improving trend, which means the company is managing its direct costs more effectively. UEM Sunrise Berhad is able to retain more profit from its sales. This reflects better cost control and pricing efficiency.
Meanwhile, the operating profit margin rose from 16.90% in 2022 to 20.64% in 2023, indicating strong operating efficiency and effective cost management, before declining to 15.54% in 2024 due to higher operating expenses or reduced operating performance. Nevertheless, the company remains profitable. Overall, this profitability ratio shows that UEM Sunrise maintains solid profitability supported by improved cost control, effective pricing strategies, and efficient core business operations, even though some fluctuations were observed in 2024.
Next, for the operating profit margin. This graph shows that the operating profit margin is improving over time. It indicates that better control of operating expenses and stronger performance from core business operations. Overall, UEM Sunrise is becoming more operationally efficient.
The net profit margin shows a steady improvement over the 3-year period, increasing from 5.57% in 2022 to 6.53% in 2023 and further rising to 7.45% in 2024. This upward trend indicates that the company is becoming more efficient in controlling costs and converting revenue into net profit, reflecting better overall profitability and improved earnings equality.
The net profit margin has increased, showing that UEM Sunrise is becoming more profitable overall. This means the company is managing both operating and non-operating costs effectively. Higher net profit margin also benefits shareholders.
Return on equity also shows consistent growth, rising from 1.19% in 2022 to 1.26% in 2023 and reaching 1.43% in 2024. This suggests that UEM Sunrise is using shareholders' equity more effectively to generate returns, resulting in higher shareholder value. Overall, this profitability ratio indicates that UEM Sunrise has strengthened its financial performance over the period, supported by efficient cost management, improved profitability, and stronger returns to shareholders.
Last but not least, the return on equity shows that an upward trend, indicating that UEM Sunrise Berhad is generating higher returns for shareholders. This means that the company is using its equity more efficiently. A rising return on equity reflects strong financial performance and effective management.
The first point, Ecoworld should improve its liquidity by introducing strategic inventory sales program such as a green home promotion. By offering incentives like free solar panel installation or covering legal fees, the company can attract environmentally conscious buyers, increase property sales, and strengthen cash flow during the slow property market. The second, Ecoworld should also leverage green financing by issuing green sukuk and obtaining green loans from local and international financial institutions. These funds can be used to support sustainable development projects such as renewable energy systems and water recycling, while also lowering financing costs and attracting ESG focused. In addition, Ecoworld should optimize construction costs through the use of the industrialized building system, which is ISB. This technology reduces construction time, depends on manual labor and material waste, leading to long-term cost savings and improves competitiveness. The first point, UEM Sunrise should strengthen strategic collaboration with the government and local authorities to participate in large-scale projects such as urban renewal, transit-oriented developments, and affordable housing. Such collaboration provides access to strategic lands, faster approvals, and reduced financial risk through cost sharing. Second, the company should also enhance its digital sales platform and expand its international market reach by offering virtual property tours, online consultations, and the real-time unit reservations. UEM Sunrise can attract buyers from international markets such as Singapore, China, and the Middle East. There will be reducing risks on the local market. Furthermore, UEM Sunrise should adopt IBS technology and sustainable building materials in the project. The use of energy efficient system, rainwater harvesting, and solar-ready design will reduce costs, shorten construction times, and increase appeal among environmentally conscious buyers and investors. Most companies should diversify their funding sources by exploring innovative financial instruments such as asset-backed financing, real estate, investment funds, and government-supported green investments. This approach reduces dependence on traditional bank loan and provided greater financial flexibility. They should also establish joint ventures with prop-tech companies and international developers to gain access to advanced construction technologies and digital market expertise. These collaborations can help reduce costs, share risks, and facilitate entry into global markets. Lastly, both companies should apply smart and sustainable urban planning in township developments by incorporating smart energy system, electric vehicles charging station, green public space, and efficient waste management. The companies can create future-ready communities, enhance long-term property value, and support sustainable development goals.
Conclusion for EcoWorld versus UEM Sunrise. EcoWorld offers a diversified business model across multiple property segments. This support market releases and wider exposure across different property types. UEM Sunrise focus on premium mid-uses and township development in high strategy locations such as Mount Kira and Iskandar Putri. Overall conclusion, EcoWorld is ideal for those seeking diversification and broad market risk across various asset types. UEM Sunrise appeal to buyer, investor targeting premium location-driven development with strong township credential. Thank you.